Welcome back to Lafayette Lifestyle. We're in the middle of tax season, so we've got Jeromy Bourque, certified public accountant, and who better, everybody's favorite activity at this time is taxes. And when I say taxes, like avoiding as much of them as we can. So Jeromy, thanks so much for joining us, man.
Oh, thanks, Robbie. No problem. I really appreciate you having me. I feel the love. Your audience is going to be really thrilled to go from Dustin Poirier to Jeromy Bourque CPA.
Well, I'm sure you'll be able to, and maybe we can get Dustin to go check you out while we're at it.
There we go.
Everybody's big question come this time. We got a break from April 15th, moving on to June 15th. Yep. So, it's a little bit late start or not really a late start, it's just later than usual. So how do we prepare for taxes and, get away with paying as little as we can legally, of course?
Right. Well, that's a very unique question. I get that every single day in my office. And generally, I like to kind of go a little bit deeper of, why are we wanting to save taxes? What's actually the use of this cash? If it's just to plainly pay the government less money than you need to, or just get every possible deduction that you're not aware of, I could do that. That's easy work. But I like to look a little bit deeper into my clients' personal finances and kind of figure out, hey, there's any other ways to build up their cash flow, or invest that money into build their wealth, or just grow their business in general. So a lot of things that we look at are further than just income taxes or sales taxes, property taxes, or anything like that. One good example is debt. So recently I had a client that came to me. They had previously gotten denied for a loan, so she was kind of scared to go to a bank, but she had a retail business and she was financing her inventory through credit cards. So I hooked her up with a banker that I'm friends with. We do a lot of networking with, and we ended up saving her $22,000 in interest a year, getting her a line of credit. And we obviously saved her some income taxes as well and some sales tax, but that was the biggest benefit, and I think she'll be happy with me for the rest of her life.
Man, that's awesome. So what are some other things that you guys look for to be able to help load that debt down and still be able to get to where that threshold where you can save the most?
Yeah. So things we're lowering debt, it's kind of like, a big thing that's popular in the industry right now is refinancing your home, right? So if everyone's got a real estate loan, a mortgage loan for 5 to 7%, right now refinancing at 3% looks great. So that's
Absolutely.
kind of what I'm looking at with your cash. If we're paying a very high interest rate in debt, let's look at refinancing that now because money's cheap, as they say.
Absolutely.
What are the terms on that loan? Different things like that. And the same goes for tax rates. I mean, if your tax rate is only 12%, what's the point of spending $10,000 on some equipment to reduce that taxable income even further when we could just use it how we would like to, or invest it into a Roth IRA or a traditional IRA and kind of get those benefits.
Real estate, man. We talked to the real estate guy right here.
Real estate's huge for businesses. If you're a business owner and your income is above the $300,000 level, if you're married, one big thing is to invest in real estate to kind of reduce that income.
So dig into that a little bit more,
Yeah.
like flips, Airbnbs, rentals, all of them are qualified for you, correct?
Correct. All of them are qualified, correct. So typically, as you know, real estate is kind of a cash flow poor investment, very net neutral, depending on how many properties you have. But long term, as far as investing goes and our finances goes, it is a huge payout on the back end, or leverage for more debt and a better interest rate on loans. So it's a really good investment, and it should be part of anyone's portfolio. And you should probably ask your investment broker about that.
Absolutely.
So a lot of times we get this little loss each year from our rental properties, which will give us lower our thresholds.
Adjusted gross, right?
Yeah, that adjusted gross down to the point where you're being able to take advantage of tax deductions that you were not allowed to because your income was so high. So there's a little bit of planning there and shifting income.
That's joint, correct?
That's joint, $300,000, yeah.
Perfect.
Individuals are about 150.
So I'm assuming with that $300,000 threshold, it's going to be different levels for different professions, right?
Absolutely. So there are, specified service professionals that threshold is lower than 300 level. If you're not a service professional, it really just means, do people rely on your advice? Are you getting business based on your reputation? That number's a little bit higher if you're not in that category. It's 400,000. And then basically you can assume half of that if you're not married.
You mentioned Roth IRA was one of the tax deductions that are out there. What are some of the other ones that somebody can look for? Average folk out there, W-2 or even 1099 that doesn't have a ton of deductions. What can they look for?
Absolutely. So individuals, since 2018, we've had a lot of changes there. It's simplified the tax code, turned our 2-page tax return into 5 little half pages. Mm-hmm. But it did remove kind of a lot of deductions there. But the biggest thing for an individual who's a W-2 is to find out if your employer has a health insurance plan that is eligible for a health savings account.
Absolutely. That's huge.
Huge, because it's the only tax deferment account that will also reduce your payroll taxes. So you're looking at saving, 6.75% immediately on that income plus your income tax rate. So it's something that I tell a lot of people to take advantage of. And a lot of people are scared of that because they think the funds don't roll over. They go away at the end of the year, and that's not true for health savings accounts.
Yeah, you could just build that thing up for as long as you need and use it whenever you need it.
Right, exactly. Some people, you can set one up through Fidelity or some other service to where you can actually invest those funds.
Oh, awesome.
Yeah.
So give me some other reasons, like if somebody's going to be interviewing a CPA or looking to hire one, what do they need to be on the lookout for?
Yeah. So the best thing to do when you're interviewing a CPA is to make sure that vibe is good. Really hone in on that being your top priority. If the communication is not very good, if they're not explaining things to you, and they're kind of talking down to you or anything like that, it's probably not the best relationship for you. You want to find someone who is responsive to you, within a reasonable amount of time. You want to find someone who can easily explain things to you, rather than prioritizing their experience in your field or years of expertise. Because usually when you're going to a CPA firm, there's going to be several CPAs in that building who can answer your question. They just might not be good at talking to you.
Fair enough.
Yeah.
That's great advice, man. So where can they find you?
Yeah, you can catch me on any of my socials, or my email address and my direct line. And I drop social media tips every week for taxes.
Awesome, man. Thanks for joining us. Really appreciate you coming by.
Oh, thanks, Robbie. Appreciate it.
My pleasure. As always, for Lafayette Lifestyle, I'm Robbie Breaux. We'll see you next time. If you want your business featured here on Lafayette Lifestyle, contact us at 347-9800 or email us at LafayetteLifestyle@gmail.com.